Okay, so we're going to run the strategy here on the NASDAQ. So I'm just going to start this up and let it run. So we've got this set up to trade 15%, I think, of the average daily range. So let's get to the open. There we go. So I'm just going to slow that down and pause it 1 second. So here is your open. So if I plot a little line there, you can see that that is 1630. So you can see all the tight price action we had before the open. And then we've got to this big candlestick here that we've put in, which is your first 5-minute candlestick. Now, that first 5-minute candlestick here was large enough, in this case, for us to trade. It was 785, which is above the minimum of 550. So what the EA's done is it's placed those pending orders for me on the chart, and we are away and trading. Okay, so the next candlestick, which was the 10-minute one, and the one following that, which was your 15-minute one, were inside bars on that candlestick. So they didn't trade at all. So what the EA does, every time there is not a trade, it will cancel off the previous pending order. And at the close of that candle, it will place a new pending order. So you can see it's placed new pending orders here. And then on that candle, it cancelled off again and placed new pending orders again. So it's what it's doing is it's automatically remeasuring every time there is a candlestick close, depending on the inputs you've put in. The reason for this is because we have built into it a loss recovery system. So the actual lot sizes are automatically calculated for you based on your risk parameters, which we'll cover in a moment, and also on the loss recovery system. So it's important that the EA automatically cancels pending orders every bar and replaces them, because if you've had losses on other instruments, it may be the loss recovery system wants to increment the lot size and try and recover those losses for you. So we'll cover that in a little bit more detail in a minute. But as you can see there, we actually got a break there on the 3-bar range. So it's the 1 bar, the 2 bar, and the 3 bar are all the same range in this case. So it's classed that as a 3-bar range being okay to trade. We've gone long here, and now the market has started to take off. You can see the stop losses are placed here and here. So that is the stop loss for the short orders. That is the stop loss for the long orders. So we'll let that one play out and see where we go. So we've broken to the upside there, and we're on our way. So as you can see, we also have 2 other things happening on the chart here. We've got a trailing stop loss here, which has just kicked in. So there is a trailing stop facility, which we'll cover the inputs for in a moment, but you can set that to automatically start triggering after the market has moved a certain distance, and you can decide how big you want that trailing stop loss to be. So when the market in this case has pushed the same distance as roughly where the stop loss was initially, which is here, it will automatically drag that stop loss up to protect your risk and give you a risk-free trade. Obviously, the danger in this is now that this comes down, collapses, stops me out, and then pushes on to target. But that's a risk you take with trailing stops always, isn't it? So, but there's a trailing stop loss, and you can see that kicking in. The second line we've got here is the partial close target. The EA has the option to automatically close out a percentage of your trade after we've moved a certain distance. So the stop loss set here was 15% of the average daily range. Therefore, I've placed a partial close of 75% of the order at 30% of the average daily range. So when we get to 2R, or twice our initial risk, we will close out 75% of the order and see if we can get a runner today to go for that big ADR push. If I shrink the chart down here, you'll see there is the target. So the target I have set personally in the EA at the moment is 1 ADR. So I know the average movement that this instrument makes on a daily range is 3670. So if today is going to be an average day or a beyond average day, we would expect price to potentially get to that sort of distance. So if we're going to get a trend day, that's as far as we'll probably get. Okay, so that's where I set my targets, and this is all adjustable in the EA, which we'll go through the settings in a minute. So let's let this one play out and just see where it goes. Not quite got to target there, so we didn't get to our partial, but what we did do was stop out on our trailing stop for a profit of 23.82. Okay, so that trade is now complete. You'll notice that the pending order is still in place. So these pending orders are left in place because the back testing has shown that removing those pending orders actually has a negative effect on the P&L. The reason for that is if the market tends to try and make a break to the upside in this case and fails, it will often then attempt to break down in the opposite direction. So if the buyers enter the market and there isn't enough volume of sellers to let them continue that rally, they will basically try to go back the opposite direction and take that break south. And often you'll find you get a false breakout at the start of the day, which means you would stop out on that first order, and then you would take a second order to the downside, and that would become your profitable trade for the day. So there is the option there to take a second trade if the first one doesn't work out, and it's important that that's left in place. If you don't want that, you can just manually cancel it off. So you would just come over and cancel the trade off in your terminal. But the vast majority of the days, if you do not get stopped out on your initial break, it will not get back to that area. This is the open, and often price won't get back to the open if it's done a break for the day. So we'll let that one play out and see what happens for the rest of the day. There we go. We got to the end of the day, and that candle at 2300, which I have set in the inputs, it's cancelled off that pending order, and we're done for the day with a nice little profit. Okay, so we'll move on to the next day, and we'll see what happens on day 2. So we're getting to the time now. So there's our open. So you can see here, we've got a 2-bar range, which is no good. So there's your first 5-minute candlestick at the open. That range was too small to trade. So it's now measured the 10-minute open, which is the first candle and the second candle combined. And as you can see, that is currently sitting at 435. The minimum we need is 558, which is 15% of the average daily range in this case. So again, there's no pending orders in play. So what we'll do now is we're going to measure the third bar and see how big that third range goes in at. There we go. Third range, again, was too small. So we didn't take a trade. We're just slightly too small. So today, as you can see, there's your pre-market ranges, and the actual open isn't really any bigger than the pre-market. So today is a day that is likely to not have enough range of movement to actually take a break. So what we've done is we're sitting there and we're doing nothing today. The 6-bar range, the first 30 minutes worth of trading, has also gone in, and we haven't gone anywhere. So the EA is basically saying today, there's just not enough momentum in the market. And results and research again show if the opening momentum is too small, you won't get a good break within the first hour typically. So your options are to reset the EA, so come into the inputs and change those inputs to an hourly chart. So you could then say, okay, we haven't had a break now for the first 30 minutes. Nothing seems to be happening. So I'm going to set the EA up now to trade on the hourly time frame. So what I would do is set that to 1730 and say, okay, look at the first hour, see how we get on there. And then you might want to go 1830 and then look at the second hour and maybe set this one to 0. So if we haven't had any decent movement within the first hour or 2 hours, i.e. we are just in rotation today and not going anywhere, I'm not going to trade because there's no way we're going to really make any money doing that. So this is a day where the EA has gone, sorry, not good enough to trade. And if we let that play out, you'll find we did get a break to the upside, but that was probably around about 30% of the average daily range. So today it's just really not had enough movement. Now you could have made money out of this, but look at the price action and how whippy it is. When you don't get that initial opening momentum, you tend to get very whippy price action. Whippy price action notoriously will stop you out. So the EA is clever enough that it knows that it's not a good day to trade today, so we'll just give it a miss. There may be other instruments today that the EA is running on, like the S&P 500 or the Dow, which actually have had volume and momentum, so it would trade those ones for us. It may have been that the DAX and the FTSE this morning were alive and we were trading those and we made our money there. But if the EA identifies no momentum, it will not take a trade. Okay, so that is basically the logic for the strategy, and that is how the EA works with those inputs.